Hey, what's going on, everyone? This is Nolan Samron, your partner and mentor for Infinite Banking. Let me give you a quick underwrite and exactly what you're looking at. This is our implementation package for Infinite Banking. And the reason why I created that essentially is because, well, when I got started in your shoes, I didn't really have a clue what I was doing. I read the book, Becoming Your Own Banker by Nelson Nash. I was enamored with the idea of whole life insurance, cash value insurance to borrow against it, to buy assets, pay off debts, that whole thing. Probably exactly what you're thinking too. And I just had a couple of more things that if I would have only known or had, especially like some assets and some material and resources, I think I could have maybe stretched some more juice out of my policy early on. So that's kind of why I'm creating this. So very simply, this implementation package has a couple of tabs. I'm going to go over all this right now. This is our Infinite Banking Blueprint, which shows you the step-by-step from introduction and underwriting to implementation. This is our policy design page, which, again, I'll show you a couple of steps here in a second on how to read through this. Our real estate investment tab, if you're considering this, exactly what the steps are to borrow against your policy and to purchase property. And then a promissory note. I'll give you that example on how I purchased my own truck and redirect cash flow and own the asset and the whole song and dance. So let me get a start from the beginning. The Infinite Banking Blueprint, very simply, this is color-coded to you, myself, and my communication director, McKinley Baird, who you probably have spoke with already. But all of these steps, the first phase is just getting to know the idea and the strategy and the structure. I always recommend reading the book, again, Becoming Your Own Banker by Nelson Nash. That's, for me, that was the fourth Bible that I read behind the Bible, Rich Dad, Poor Dad, Commercial Real Estate Investing, and then in Tax-Free Wealth. That was one that just made me take another step and another look and say, maybe there's something I'm missing here. So this goes through all the steps on how to actually understand what is inside of the policy from a 30,000-foot view. And then the introduction and the underwriting, basically, again, the video series that has to do with another colleague of mine, Mike Schwally, goes over in more detail the spender saver, how the banks make money, giving you just some more in-depth understanding of what a policy can do and how to behave with your money. And then the questionnaire that you probably have seen or you are going to fill out that will just allow you to go and do the underwriting review, which from there essentially allows the insurance company to give you a health rating. And then we can go through the whole song and dance of setting up a policy for yourself. But again, this will encompass everything so you can have all the information so you can decide and make the choice for your family what's going to be best. But again, these are all the steps that go through here once the policy is placed in force, exactly how to borrow against the policy to go and, again, purchase assets and pay down debts and things like that. So policy design, there's a lot of noise on the internet on the design structure and how much paid up additions compared to base premium. I'm a Nelson Nash purist, and I don't tell people what to do, but if you are looking for something outside of the 60% to paid up addition, 40% to base premium, I have plenty of people I can recommend. That ratio is what is the cheapest for you and the most compound interest that's also going to benefit you the most. So that's how we design all our policies. And this number, what this shows essentially is a 10-year window of deposits. And there's a couple of different options on this left-hand column on your deposit schedule. You can have the first option, which is all at once. The second option would be you can put the base premium, you can deposit that on a monthly basis, and the paid up addition can be deposited all at once. Or third, you can do it both. You can do monthly and the paid up additions all at once as well. So there's a couple of different ways. Most importantly, you own the policy, so you tell the insurance company how you would like to put money into the policy. And then this number right here is malleable. So when you have this policy, what this will do, this will change the schedule of what your cash value is, what your liquidity on that annual deposit is, and then what your death benefit is going to be. Now, all of these numbers will not be exact to you because once you're in underwriting, we can go over your exact numbers and what it will actually spit out down to the dollar. This is more of a 98% accuracy number, and it gives you a much better understanding of what it will look like when a policy is actually enforced with you. So you can play around with this number all day long. Again, so you can put, any amount of money in this thing, again, $50,000. It doesn't matter. All these numbers they're all ratioed out. So when you're messing with this thing, only touch the number in the green, okay? Now, real estate investing, this is another one that I think If you know me, if you follow my social media, you know that I'm a massive commercial real estate wannabe, basically. I've owned some commercial warehouses, and to me, that's the best route that I've discovered to creating financial freedom. And when you couple it with insurance, and couple it with whole life and infinite banking, it allows your dollar to work a little bit harder. You can squeeze some more juice out of your deals that way. And so I just created this one pager just showing your different purchasing options. If you're going to buy a piece of property, you might as well get the highest rate of return on it. And so this just kind of shows the math. So I'm using just an example, and these three numbers are variables. All the rest of these numbers are going to be just constants that are going to spit out from a formula. But again, if this number, well, let's say you were going to buy a $500,000 house and the income was $50,000 or whatever the number would be. I mean, I don't know what the expense would be, $4,000, right, or whatever. Well, let's see here. Let's see. I'll have to work on maybe building this out a little more properly, I guess. But most importantly, when this whole idea comes together, what you can do, this will spit out an actual intrinsic value to allow you to look at what a rental property will look like for you in your investment property. It's going to allow you just to have a better understanding of like, hey, should I do it with an all cash purchase? Should I do it with bank debt? Or should I use this infinite banking concept, which will, again, end of the day, it's not so much about the cash flow, it's about your cash on cash return. To me, that's the hill that I'm willing to die on and focus on, simply because really, if you can have less of your own money in a deal, you're going to be able to do more deals going into the future. So this just shows the difference of all cash, bank financing, or using the infinite banking concept. And then finally, this promissory note, which this spits out essentially is just, I'll give you an example. I purchased my Tahoe with a promissory note, and very simply, I bought this thing for it was a little bit more than that with the trade-in, of course, but I had basically $500,000 or a $55,000 loan at 5% interest and some change. And basically it was amortized over 6 years. And basically you don't have to print this out or anything, but I did it because I was like, how am I supposed to teach people to do this if I don't do it myself? So what I did basically is I took a policy loan for this $55,000. I went to Donahue Auto and I bought this car. And then every single month, what I do now, it's actually $896 that I pay back. But I pay it back to myself every single month, principal and interest. So this $9,200 over these 60 months, that's what the financing company was going to earn if they weren't going to lend me the money, if they were going to lend it to somebody else. So basically what I'm doing is I own the vehicle. Nobody's telling me what to do. Every single month, basically $900 in cash flow is coming towards me, and that's all freed up cash value. I can use it again. I can rinse and repeat it versus maybe sending it to, the America First Credit Union black hole. It's gone. But then most importantly too, the interest that the bank was earning, I'm now earning, right? So I'm basically creating a trifecta on top of what all my policy is earning in the background because I did not interrupt compound interest. So there's a couple of ways. Again, like I said, I created this package just because end of the day, there's some ideas and thoughts that if I would have had those tools when I first started, I think I could have maybe been a little more efficient with my policy. And so I want to offer that to you. So that's what this is. And if you have any questions or thoughts in the meantime, just don't hesitate to reach out to us. You're already in our group chat with McKinley and I. We would love to help and go over any more intrinsic details about you and your policy and what you're trying to accomplish. But most importantly, we care about you and we want to help you succeed any way that we can. So we can't wait to have you, and we look forward to seeing you on the other side. Talk to you then. See you soon.